So you do hear a lot about probate avoidance. Why do we try to avoid probate? What is probate? Probate is when someone passes away and there's an asset that does not have an ownership designation or a beneficiary designation that governs where it goes. That asset falls to what is called probate. If there's a will, it governs how that asset is distributed. If there's not a last will and testament, the laws of North Carolina govern where that asset goes. But the reason this is so important is probate is a court-administered process. It is time-consuming and can be very expensive as well. There's a lot of documentation that goes into what you need through probate. So not only is it time-consuming with the court process, but also as the administrator, executor of the estate, you're spending a ton of your own personal time and effort gathering information that's required by this process. That is oftentimes an overlooked expense of the time, the heartache, the headache of gathering all of this information. Unfortunately, if you don't know what you're doing, you can have one clerk tell you you need one thing, you go get that document, and then another clerk says, no, I'd really like to see something else. And this happens, unfortunately, all the time. But again, walking through that process, it is time-consuming, can be expensive. There's court fees associated with these filings based on the number of assets that are going through this process. So you do hear a lot about probate avoidance, just to avoid that headache, heartache. And it's also a public process. So a lot of people don't want everyone to know what their loved ones are coming into, what they're leaving their kids or what have you. I did not believe it until I saw it, but there are people out there that search these records and then prey on the beneficiaries. So if we can keep it private, keep it efficient, especially from a time perspective, a tax perspective, that's something we're always aiming to do. We always want to avoid probate if we can. So a trust is one of the most common tools you hear about to avoid probate. And the whole point of a trust is it's its own little legal entity. You can either move assets into the trust during your lifetime. That's called funding the trust, actually changing ownership of an account, of an asset into the name of the trust. So it's no longer in Lauren Maxey's revocable, or it's no longer in Lauren Maxey's individual name. It's in Lauren Maxey's revocable trust. That's the ownership change during your lifetime. Or you could hold an asset in your individual name and beneficiary designate it to go to the trust at your passing. That also would avoid probate. So it's one of those things of a separate legal entity that doesn't pass away when you pass away. It's still there. It's still governed by the terms that you set in the trust. Now, one of the things we talk about with our clients is not everybody needs a trust, but there are very common reasons that we do recommend a trust. That if you are very probate avoidance conscious, if you have young beneficiaries that you want to make sure get the benefit, but maybe not the control right away, that's a common reason for a trust. If you have business ownership interest or real property located outside of North Carolina, that's very common reasons for wanting to get a trust in place. If you've got a beneficiary with special needs, if you want to engage in some asset protection planning, very, very common reasons we put trust into place. It is so, so important to sit down with an estate planning attorney that knows all of the tools in the toolbox so that you can assess what is the best probate avoidance tool for you. Is it a trust, or is there something simpler that you can do? That's always something we're looking at. Not everybody needs a trust, but when it's appropriate, it can be such a powerful tool to help avoid probate, give you the peace of mind that your loved ones aren't going to have to deal with that court process. So a beneficiary is someone that is named on an account. Very commonly, it's a contractual designation that you set up on an account. Different institutions handle this differently. Some are old school and you have to fill out an actual form. Others, a little more new age, you can do it online and name who your beneficiary is on your online account. A beneficiary is who actually receives the asset when you pass away. And so we always, as we're looking at things with clients, are looking at What is the ownership designation? Because that actually controls first. Is it owned jointly with rights of survivorship with someone? That right of survivorship on the ownership designation controls first. So very commonly in North Carolina, when a husband and wife buy a piece of real property, the ownership designation on that piece of property is commonly called tenants by the entireties. And that is, there's a right of survivorship associated with that type of ownership. That controls first. So if one spouse passes, the other has complete ownership if that's how it's titled. So you look to ownership first. But if an asset was in someone's sole individual name, like a retirement account, that's very common, you commonly want to have beneficiary designations that align with your planning wishes. And so this is incredibly important. You never, ever want to do your estate planning or your financial planning in a silo. You want to make sure they're working together. Because we can have the fanciest estate plan in the whole wide world, but if your financial beneficiary designations, ownership designations are in conflict, we haven't done you a whole lot of good. So we want to make sure they're all working together. But yes, a beneficiary is who would receive that asset at your passing, and the ownership designation is incredibly important as well. Again, that's kind of where we start, and looking at, does this actually reflect what we want with our estate plan, and get the assets to who they should be going to in the manner that they should be going there. So one of the most common questions we get is around gifting strategies. Now, this is something I always say, don't necessarily let the tax tail wag the dog, but you gotta look at taxes when it comes to gifting. So if you just want to give something to someone so they can have the benefit, you can see them enjoy the asset that you give them and you get to enjoy their enjoyment, sure. But let's talk about what is the most tax efficient asset to give them. So one of the most common things we're talking about with clients that do want to go ahead and start gifting is, what asset is the most beneficial to gift? And this often encompasses looking at the tax implications of the assets that you're giving. So bear with me when we talk about taxes, but essentially, to keep it very simple, there are assets that are more beneficial to gift, that commonly like cash or something like that. You never want to gift something like a piece of stock that has a low tax basis, that if you give that to your child, that child takes your tax basis. So if they turn around and sell it, they're going to have to pay on the gain that's accrued in that piece of stock. Now, if you just gift them cash, that's inheritance, income tax free, easy. If you hold on to that piece of stock and give it to them through their estate plan, through your estate plan, they get what's called a step up in tax basis at your passing. All of that gain that was in that stock just disappears. So again, knowing the tax implications of what you're doing, like I said, don't let the tax tail wag the dog, but if you do want to gift, let's do it in a tax efficient manner. That's incredibly important. Gifting to an individual versus gifting to charity is also a different ballgame. So you want to make sure you're doing the proper things there. And also, the biggest thing is knowing that you're taken care of first. So while it is a lovely, lovely impulsive, I want to gift to avoid probate, you don't need to gift to avoid probate. There are plenty of other things we can do to avoid probate, whether it's setting up a trust, making sure beneficiary designations are in place, what have you, whatever is most appropriate for you. I'm always looking at, if my client needs something, do they have enough assets to take care of what they need in the future? We never know what life's going to throw at us, what the cost of long-term care could be. Incredibly important. Make sure you're taken care of first. Don't worry about gifting being a probate avoidance tool. I always say you can gift if you want to see someone enjoy the assets that you're giving them, but it is not necessary as a probate avoidance tool. Avoiding probate is a common goal that we discuss with our clients. It's incredibly important not to be overlooked. Just having a will does not get you there. Call NC Planning. Our team is here to help walk you through piece by piece what's the most effective and efficient way to avoid probate for you.